today I wanted to talk about five factors that real estate investors should be watching today. So the first thing on that list is the supply chain. So just think about what's been going on the last 18 months or so and how that's going to affect you. As far as supplies go, whether it's manipulated or just messed up, the average household is finding the supply chain pains and disruptions in their life very real. Some are ignoring it and hoping that it passes. Others are stressed out about it. Many just don't understand it, to be honest with you. Some are finding it painful as they can't find already their kids' favorite Christmas season gifts. So it's a pain point, right? Frustrating. In real estate, it means that some construction materials are not available. Furniture is hard to come by. On the furniture note, I personally have had furniture back ordered for about 12 months. Can't get it. So, very frustrating. Orders that have placed may not arrive or have taken longer to arrive. Fewer homes are being built, even though you see a lot of construction. A lot has been paused based on availability of the materials. So consider that. Think about how that affects your life. Number 2 on the list, going by memory here, second and third home market is growing. So you own a primary house, you're going to invest your money, and you're going to buy a second or third house. According to Bloomberg, the demand for second and third homes is growing rapidly. So this could be a great niche for investors and downsizers to target. One which is often rich with qualified buyers, and they're not really price sensitive. Where did they get that money at? They got it from cash out refis of their primary residence, or they liquidated a smaller portfolio that they own, and they're using that to buy houses, investment properties. Why? Because it's a hedge against inflation and risk in the market. 3, this is a tricky one. It's controversial. New recession. So some analysts are arguing by the time the next set of economic data points comes out, it's going to reveal that we've already entered into a new recession. They're mostly basing this on what they see for the leading indicators and falling consumer sentiment, right? How happy are you about where the market is today, what's going on, and how that affects you? Consumer sentiment. While the majority of the mainstream data being published shows the economy is growing, mortgage forbearance is declining. Unemployment, depends on what your data set you're looking at, can be low. But we all know that we've heard pains in the stores and restaurants saying that we'd be open more if we could find people that wanted to work. So come to your own conclusion on that, right? That's something that I think about when I look at these data points. How does it affect me, and how does it affect my life, and what can I evaluate? How can I apply that to my life that makes common sense? So on the bright side, recessions, I hate to say this, but they're a great time for real estate investors to find discounted properties. It's just sad, but that's the way it is. The market goes in cycles. I did a video, or I'll do one here soon, about the 4 cycles that real estate goes through and where we are now and how that affects us moving forward, and where do we want to be opportunistic and where do we want to be cautious and play it safe. Where are we at? Number 4? Number 4 on the list, warp speed inflation. So those of you who make less than $250,000 a year, you're probably feeling the impact of rampant inflation already. At the gas store, look at the food that you buy, compare that to what you paid a year or 2 ago. I'll take pictures when I'm at Costco, do a snapshot of what I paid for my Cheerios, and what was that picture look like 2 years ago. And the size of the box is getting smaller and the price is going up. That's inflation, people. Gas station, your taxes, there's no sign of it slowing down. So the good news is that real estate keeps appreciating and growing at a faster rate than inflation. So at this point for the year, many areas we've seen 50, 60, 70% increase in prices. There's very specialized markets, right? And just think about that. Look at your area and how does it affect you. Number 5, last one here, liquidity and credit. So how fast can things continue to grow versus running into a financial crunch depends a lot on credit markets. So this includes credit, interest rates, credit scores, international credit, mortgage availability. Some markets have been seeing close to 60% of the home sales or so being sold to cash buyers. But financing is essential to keep the economy moving. Right now, that money is available and it's so cheap, there's a lot of influx of buyers into the market, getting into investment properties, selling their primary residence, downsizing and buying multiple investment properties all at the same time. So for real estate investors, it's time to take advantage of it. I hope you like this video. Send me a like, thumbs up, shoot me a message. My information is down below. Jump on our website and like the video. I hope you guys have a fantastic week, and we'll talk with you next video.